undeniably much of the focus at the moment is around the banking sector. We've had the latest development there evolving out of the Bankers Committee meeting, which was held yesterday. All banks agreeing to a levy of 0.3% on total assets from 2011 through to 2020 for a sinking fund for Amcon. The CBN will then also put in 50 billion naira annually. What have been your overall impressions of that decision?
Thanks, Alishia. We welcome the release of the committee yesterday in terms of how the shortfall of the funding from Amcon might be met. The market had been wary, if you'd noticed, for the last few weeks as the news of Amcon was sort of hanging in the wings. Obviously, we determined that Amcon, as it was going to be set up, wouldn't really have enough funding based on the original guidelines with the Ministry of Finance and CBN providing 1 trillion naira. We recognize there might be a gap. But, from the Bankers Committee meeting yesterday, clearly they have determined on how to resolve that funding gap. So that should give us a stronger boost of confidence in the market as people recognize that Amcon is here to stay and indeed would be focused on resolving the problems in the banking sector.
So overall, Ike, the assumption is that this was the best solution, right? Or was there a possible different route to take here?
Well, there are many different ways resolution trust corporations have been set up in many parts of the world. But I think Nigeria has a unique problem, and that the central bank, together with bankers, have figured out a solution that works for us. Clearly, it's not going to be one size fits all, but we believe that this solution would certainly work. Clearly, all the bankers have indicated their support for it from the resolution they passed yesterday. So the rest will be to see how it translates into action, really.
It's interesting because, yes, we know now that the banks have all come to the party and said, that they are going to agree to this levy of 0.3% on total assets. Correct. From 2011 to 2020. But just how easily do you think these banks came to this resolution? Because one would have assumed that some of the healthier banks would have been pretty resistant to this move.
Well, if you recognize, if you're operating in the environment, you're also open to systemic risk. Yeah. The rescued banks collectively had about 2.2 trillion naira of non-performing loans. And they also had another 1 trillion naira of sort of placements with the healthy banks, so to speak. If you think about the deposits they had in their system, the rescued banks had about 3.6 trillion naira of deposits. So even if you decided that you were not affected, you're still operating within the same system. Were the CBN to pull back and decide not to come to the rescue of these banks, then you will certainly have some exposure, no matter how strong your own balance sheet is. So it makes sense for all of them to collectively come to a solution that works for the industry as one. To
what extent do you see there being a threat moving forward of banks becoming lax again, knowing that they have this to fall back on now, in essence, their own capital?
That's a good question. I think the overriding tone of some of the resolutions, reform measures that the central bank has introduced is to have much more risk-based supervision. I don't believe the central bank will quickly go back on its supervisory role as a result of setting up of Amcon. I believe together with the NDIC, the SEC, and of course the Nigerian Stock Exchange, that everybody will be much more vigilant going forward to ensure that this doesn't happen. And clearly, when you're contributing 0.3% of your balance sheet every year for the next 10 years, you certainly will be concerned that your people are behaving properly. You will not necessarily want to be the one having to create a problem for the rest of the industry.
Yeah. Well, let's take a look at what you foresee being the impact on bank share prices today, specifically those healthy banks for now, because if we group them in one lot, looking at the healthy banks, this will be denting their profitability moving forward.
Yes, to some extent, but then you would also expect that they will recover some of the funds they have in the system, which are locked up in the balance sheet of the rescued banks. Mm-hmm. What you've seen from the results that have been released so far is that the bank's credit growth has fallen off from last year, but nonetheless, you're seeing them reporting much better numbers. That is all part of their own focus to reduce operating expenses You know, a number of them have reduced costs and laid off some staff. But fundamentally, the cost of money has come down for them. Last year, you saw money market rates in the sort of double-digit levels. You know, 11% was not unusual. Most people could expect to get as much as 14% for placing funds in banks. Today, it's around 2 to 3%. So that interest expense drop has, you know, allowed many banks to book in more profit. I think that, you know, if you look at the potential for growth of the economy, that the banks can very quickly grow up to avoid recording a sort of a diminution in profits as a result of this contribution to Amcon.
Well, for the rescued banks, then this certainly is also good news. Are we likely to see a re-rating of these rescued banks from here on out?
You also have to remember that the rescued banks are going through a process of finding suitors for them.
Yes.
The fact that Amcon is going to come and bail them out, so to speak, doesn't mean they will continue to operate in the shape they have been. We're waiting any moment now to hear the results of various due diligence reviews, and obviously these banks have to get the buy-in of their shareholders, and together with the partners who are interested in teaming up with them, we may announce new investors that are coming to take a stake in these banks. So the story is not yet complete. One segment of this will be the capital injection by new investors coming to work with the rescued banks to create growth and profitability for the shareholders going forward.
So looking at all that's come to the fore, Ike, does this now answer all of the systemic issues around Nigeria's banking sector, in your opinion, and concerns around viability? Are we going to see those finally being put to rest?
I think that's for sure that would happen. What you've seen is a lot of analysts overseas have indicated that the Nigerian banking sector is very sick with NPLs, you know, as high as they have been. However, with this Amcon matter put on the table once and for all, and the focus of the Bankers Committee to support it, I think investors can be rest assured that the industry has nowhere to go but up. You can see that in the current line of profitability being announced, despite lack of loan growth, but we would expect that as the economy begins to trickle up in the next few months, the next couple of quarters, then you'll see much more positive growth in the industry overall.
Just very quickly, Ike, we know that Zenith Bank came out with results late yesterday afternoon. It's been amongst the latest of the banks to come to the fore with an earnings report. So your overall impressions there?
Well, quite impressive. You saw net profits go up 100% to 25 billion naira. But if you look at top line, they were down about 13%. That is also very similar to the picture we've seen with other banks that reported recently, First Bank, and if you know, Diamond Bank. So again, it comes back to the issue of, cost of money has gone down for them. They've rationalized some internal costs, but they haven't been growing their loan book. So as a result, they are recording, good, strong earnings, but the top line growth is still challenged. We would expect this to change in the next couple of quarters. If that's not changing, then clearly there's some issues as to the overall growth of the economy, in terms of the GDP growth and the support of the rest of the sectors.